Hey everybody, welcome to Options with Hans. I'm Hans Albrecht. I was a pro market maker for 15 years and then a decade running options income funds, $1 billion managed. Hit like, subscribe, smash that bell. I think there's supposed to be a bell down there. So smash it if you can, because that's what people say. And grab those free ebooks down below. Do it today because I wanted to let you know about my July 4th special that is going live soon on Leaps Trader. And the wait list is open. We've got room for a few more people. And I'm going to show you some eye-popping kinds of stuff that you want to see here in terms of performance in a moment. But again, as always, your trade, your responsibility. And if you're okay with that, let's move on. We talked about the SOXL trade about, I don't know, it was about 5 weeks ago, I think, right now. And I talked about how I hadn't traded that thing in about 10 months. I don't like trading those leverage products because they have that leverage decay, right? When there's lots of what we call realized volatility, meaning lots of movement up and down, there's a rebalancing effect that happens because in order for them to give you 2 or 3 times performance, they need to reallocate when there's a big up move. That's a swap product. The people running this thing have to put more of the underlying in there so that they can guarantee you that next day's performance. They do not guarantee you a 1 week or 3 week performance or a 6-month performance, but they do their darndest to give you that 1 day of performance. And that requires adding a lot on rallies and then selling a bunch on sell-offs, and that creates that leverage decay that can hurt these products. But every now and then a trend emerges and these things get down to a low level of volatility. I teach you these kinds of things in my mentoring program where you start to recognize where something like this is safe. And it actually happens to be, it's sort of counterintuitive because the option premiums are actually at their lowest when these products start to make sense as things to sell options on and play options on. So it doesn't always make sense in the options world, but that's how these things kind of work. The trade was on the incredible explosion that I am seeing in inference, right? People are starting to talk about it a little more. I've been screaming about it for a couple months now. People are talking about how this is going to move into all areas of the economy. So think of this as moving from the training part of AI, which has really kind of given us this amazingly beautiful chatbot that was ChatGPT. We're like, wow, that's a very expensive chatbot you guys are building for hundreds of billions of dollars. What more could there be? Well, what more is what is happening right now. We are going to see it spread throughout the economy, throughout industry, throughout our lives in ways that are going to create utility, that are going to create productivity, efficiencies, things that we can't even imagine in a way are about to happen. There are going to be a lot of good things. There are going to be a lot of bad things. And one thing I've been telling people literally for years, I've been covering this sector for about 8 or 9 years as a portfolio manager. I ran a huge thematic Industry 4.0 department at an ETF company while I was portfolio manager, talking about AI, big data, robotics. And I remember even years ago, I said, listen, if you are going to be displaced, if you're going to lose your job over this, you better use the one hedge you really have, and that's investing in these companies that are doing these deeds, and they are going to do fantastic, and you want to really hitch your cart to something like that. So SOXL is a way to play. Of course, the underlying is the SOXL, which is a product that owns 30 different semiconductor companies. The SOXL is the 3-time leverage version of that. So it's going to move 3 times what the SOXX moves. So it's high octane stuff. But once you get some momentum going in something like this, and I'm going to show you the chart in a moment, that's the kind of momentum I'm talking about. This can really start to do some amazing things. So I'm going to show you the trade that's up 200 and we put it on in the video. You can go back and watch these videos. No BSing here. 246%. I'm not happy with that. I'm waiting for 900% on this particular trade. So this is something that I think has real legs to it. I did an update a couple weeks later. I think that trade is up 150%, and I think this trade is still valid, especially as we break out here. So in this inference phase is going to be unbelievable. It requires a lot more compute, 20, 25 times more compute, more power, more everything. It's going to push into various software companies. I'm going to be putting out another video on a company that we have in our Leaps portfolio, Leaps AI. That is really going to reap. There are 2 companies in particular that are going to reap the incredible rewards of industry having to get involved in this particular theme. So SOX has a whole bunch of different parts of the semiconductor industry. This, for example, is a number of the fabless ones, right? So a lot of people don't realize NVIDIA, AVGO, AMD, they actually don't manufacture their chips, but they design them, and they're really the best at that particular part. of the equation. So the trade was, let's do a little bit of an update. The trade was, we're going to do a turbo trade, which is selling some of the 12 strike puts Jan 2026 at 258. I think those are down to about $1.30. So you've captured about half of your premium there. And trade number two, which is the one that really gives you the convexity, right? That's the one that you really want. I mean, you sell an option for 258, the most you're ever going to make is 258. A lot of people say, oh, that's a 100% win. I guess you've captured 100%, but it really isn't. It's not 100% on your underlying risk. So a lot of people kind of stretch the truth on these things. Hey, that's the options industry. That's the option selling industry right now. But the part of the trade, the leg number two, is buying the calls at the 23 strike calls 2026 at 255. So we'll take a look at those right now. I think they're trading around 650. So that's your 245, 256% or whatever it is. And that effectively gives you that upside potential. So now the SOXL is trading around 2390. You've paid 255 for those. Technically, at expiry, you need this thing to get a little bit higher to break even. But right now, you're doing really great. And the idea is, I think this could be a 8, 9, 10 bagger kind of trade in the long run. Now, if you get in now, it's not quite as good. This was the update trade here, buying the Jan 24 calls at 310, and I'm not sure where those are. 24 calls are 615. So you buy this 310, 615, that's almost 100% at this point. So big moves out there. I think we're just getting going in a lot of these areas of AI that I'm talking about. It's hard to believe that, because that's all we talk about is AI, but really it's kind of underhyped, and I keep saying that. Another trade we did was this one here, which is a data center name that is very undervalued from on a relative basis to some of the other ones out there. Bought this in here. I think this thing's trading at $50. We also did an income trade where we made 5% a year. So this is hedging income, long-term performance done properly. You can really screw those kinds of trades up if you don't do them properly. Here's ARC. We added this on the breakout. This is now trading around $70. I think that trade, I will show you some performance in a moment. You can see here's the AI portfolio, 54%, 36, 27, 47%. And that's a newer portfolio, so the numbers aren't as eye-popping, but I think anybody would be pleased with those. Core portfolio, 156%, 120%, 198% there, and a lot of 39, 48%. So we've got a stinker here, down 65%. This portfolio is up massive. It's up, I think, 26% this year, with the S&P kind of up a little bit. So that's the kind of performance you get if you learn how to do this properly. So I say this is an interesting trade. Let's take a look at the board again and see what we can find. Okay, so first off, I wanted to take a look at one of my favorite charts here. So this is really an indication of kind of where that speculative money is going, that kind of animal spirit, let's go for it kind of money, FOMO. In a sense, which I think is going to start to grip AI. I think this could really be starting to inflate something spectacular potentially. So I'm excited about it, and I think it's something that really could have some legs to it. So if we look at, this is the 𝐴RKK, which is Cathie Wood, versus the big cap stocks, XLK, NVIDIA, Microsoft, et cetera. And you can see here, I said when it broke out of this traffic jam in here, I said this is going to get back up to 0.28. This is the relationship between the two, right? This is not one of them, it's the relationship. So when this thing's going down, that means ARK is underperforming big cap, and when it's going up, ARK is outperforming. Right now, it's back up to a relationship point that it had a long time ago, right? So it's sort of testing this kind of fourth top, and I think it keeps going. Like I mentioned on the weekend, I think it can maybe consolidate a little bit here, maybe pull back a bit. I think it's a great buy if it does pull back. In terms of these names, but don't be surprised. They've had incredible runs. We could see a little bit of a pullback, but I think it does ultimately keep going. And if you look at the long-term performance, now I don't want to tell you that this is realistic where these things were trading in 2021, but I want you to look at it as a kind of general relative sort of indicator that could give us an idea of, are people starting to get really excited about things? Is there sort of a bit of kind of loose money chasing stuff? And that's important, right? As a trader, as an investor, you want to kind of be able to tell when that's happening. And you can see we kind of had a very long, difficult period. Cathie Wood has not been a hero lately, but she could very well become a hero again. So we're seeing this. If we get above the 200, we're starting to see some very nice action from, if I look at the 1 year again, look at these moving averages, right? You've got the 200, you've got the 50, the 20 crossing the 50, all of them starting to point up very nicely. I like that we're sort of in this very positive area, right? The nice way to use moving averages is if you're below an important moving average, and I think the 9's important, the 20's important. If you're below it, then you're probably durably not doing well, especially if the moving averages are starting to point down. Now we're above this 20 here and we're staying above. We're certainly a little bit extended in here, but if we get back to somewhere around here, that could get of course, remember the moving average is going to start to catch up to the price action, but we get back down towards that moving average. That could be an interesting spot to perhaps start to allocate more to, as long as this picture is starting to look good, right? Sometimes when you're between the moving averages, you're kind of in no man's land, right? Anything can happen in here, in here, in here. We're kind of between those. We're in no man's land. We're not in no man's land anymore. So that's where in my income programs, you want to be able to get better at reading where the no man's land is, because there's sort of get in trouble areas and then there's green light areas as well. So here's the underlying SOX. This is the 30 semiconductor names, SOXX. And you can see that we had this really ugly period, of course, a few months ago, and we're starting to break out. We're getting towards these highs here, right? So there's quite a bit of congestion in here. This could maybe take a little bit of work. Now we have an incredibly strong narrative that is going to make this glass half full, in my opinion. But don't be surprised we kind of move a little bit sideways here, but with the idea that eventually we're just going to really kind of rock and roll, I think, to the upside. Here's your SOXL, which is going to give you that better performance as long as you don't have too much chop. Okay, so if I look out about a year out, this option pricing is cheap still. It's just still cheap. I think it could move higher if we do explode to the upside, but it's just very, very cheap. And I don't think they're really pricing this for crazy moves. You can see the skew is very, very flat. So nobody's really kind of thinking this is going to go massively to the upside. Now, there are partially some reasons why it's flat because of the way that it's structured, because of that leverage decay. But generally speaking, it's really not something like, if you look at the term structure, it's very, very flat over time. Although this scale is a little bit misleading here, but I think it's an interesting opportunity, coupled with option pricing that doesn't seem all that expensive. Now, it's not that it's going to be very volatile up and down. The hope is that it's volatile in one direction, which is basically to the upside, right? Upside is still volatility. So let's take a look at some of the option markets at this point. So let's take a look at, there's a Google, not my favorite, but it's coming back today with everything else. I did add a few more puts to it. Lord help me at this point with my Google position. Let's take a look at the SOXL, looking very, very nice. I've got this nice upward moving channel here. Maybe we get to 25, 26, then it's sort of, looking pretty good to the upside if you think you can chart something like this, which again, I mentioned there's a structural implication to how it behaves. So, it's maybe not always the best thing to chart. But if I'd want to give myself a little bit more time. If you think it really is horse out of the barn, then I think anything in here could look very, very interesting. You could pick up a Jan 2026 30 for about 415. You could pick up something a little bit cheaper if you really think it could go for a bit of a run. I'd want to look at something just a little bit with a little bit longer duration to it. So that's why I've been targeting the 30s. So in the program, we've sort of been looking at some of the 2027s, which aren't that expensive, and they are relative to the stock price. But in terms of the sort of leverage that you get, really not too bad. So you could look at something like a 31, Jan 2027 31. You can maybe get those for around 750. We've been adding those over the last couple of weeks. I've been adding tons of this. I've been adding even the underlying. Bought a whole bunch at 20 and a half. I bought a whole bunch down in the 15. So this is something that I'm just kind of layering and playing for that explosive upside move, right? I think SOXX really has a good chance of taking out its old high. I think that's almost a foregone conclusion, considering what's about to happen in the area of AI. And then it potentially keeps going, right? And so there are other names I'm interested in. Qualcomm is interesting. Have a position there. AVGO is a must-have. It's the nerves, it's the spine, it's the connectivity for data centers. And data center explosion is happening and is going to accelerate. So very, very interesting kind of selection of semiconductors. And if you don't want to choose, then you just pick something like a SOX or a SOXL that gets you that diversified sort of approach, which isn't always a bad thing in technology, right? Because it's hard to know. If you've owned Intel instead of Nvidia, you know the pain of of being on the wrong horse. So you want to make sure that either you really, really know this stuff and can pivot quickly, or you just kind of take a diversified basket of the theme that you're in and just enjoy the overall theme doing well, right? So here we are, the SOX breaking out once again. I wouldn't bet against this. I mean, it looks good. It's consolidated for a little bit and broke to the upside. So that's a powerful move, supported by, I believe, some very, very, very strong fundamentals. I think people look at these things and they say, well, you know, they're only growing so much. No, no, no. They're going to be growing at rates you can't quite comprehend in terms of what's going to be expected over the next few years of how AI is changing pretty much everything. So we'll see you in the next video, and hope you enjoyed that. See you in the next video.